Hello, everybody. Welcome to Monday. The S&P 500 was down 0.1% today. Actually, kind of an accomplishment considering how much the market went up on Friday. Just to hang in there and go sideways, go up a little bit. That's a good sign, actually, that it stayed up there. We did have a really good run going in the morning and actually broke through 3,900, up over 1.3% on the S&P, looking pretty good. And then we had a couple Fed governor interviews that seemed to bring the market down, both talking about raising rates past 5%. One of the gentlemen talked about keeping them up there for a long time. This is the obvious, attempt by the Federal Reserve to calm the market down and bring it back down, because a high market that's running really hard would put, upward inflationary pressure out there. So that's what they're trying to stop. The other thing I find very fascinating is that the Fed actually hasn't been able to do very well at predicting what they're going to do with rates. So to say they're going to have it at some level for a long period is at best a guess. They've not been very accurate so far. The market today actually dropped on the 2-year Treasury. The yield dropped quite a bit and is quite a bit off of its high. So the bond market doesn't completely agree with that sentiment that rates are going to go up and stay up for a long time per se. So we'll see how that plays out. I think it's really more of a matter of focusing on the important components. So number one is we have the inflation report that's coming out on Thursday. The expectation is 6.5% on the CPI. It was at 7.1, so that'd be a nice drop. See if it comes in better or worse and see how the market reacts to that. And then more importantly is really to look at what's happening with earnings, because I do think the inflation story is starting to fade a little bit with some of these information that's coming out. Wage growth was lower, it's been dropping, those types of things. The CPI is coming down, the core is coming down, PCE is coming down. So those could change, but definitely the inflation story is probably secondary to the recession story. And I think you'll find out a lot more about that as earnings start to come out. There's still fairly good expectations for what earnings will be. Do companies miss those expectations? Do they beat them? What do they say about the forward guidance? I think that'll tell us a little bit more about what's going on here. We've had some earnings reports already, good ones from FedEx and Nike and bad one from Micron, but we're going to start to get a whole bunch of reports here, really starting on Friday. So look forward to talking to you tomorrow and see what happens then. Thank you very much.